Okay, so 2 minutes into a sunrise swim off Jumeirah Beach, I realised that my tax bill had just washed away with the tide. Stick around and I'm going to show you how 5 weirdly and wildly different countries pulled that magic trick on my crypto gains. So picture this, I'm hunched over a laptop in a cramped London flat, staring at a spreadsheet that looked like Jackson Pollock painting of red minus signs. HMRC wants its slice, my coffee's gone cold, and my Bitcoin's profit kind of feels more like a ball and chain than a moon ticket. Now that was me, right? There has to be a better way kind of moment. And it kind of launched a year-long treasure hunt that took me from the Caribbean breezes to German beer halls, digging for places where my crypto wouldn't get mugged by the taxman. So, the first stop, that was the Cayman Islands. Landing in Grand Cayman is kind of like walking into an Instagram filter. Turquoise water, friendly iguanas, and the kind of faint smell of sunscreen-scented money. Locals joke that the only thing taxed here is your patience waiting for the rum punch. Then they're not wrong. There's no income, there's no capital gains, there's no corporate levy, zip. And I met a DeFi fund manager named Tara at a beachfront shack. Now she sipped her pina colada, pulled up her wallet app, and said, "Every Satoshi that I make stays mine." Now, the secret sauce is the updated, Virtual Asset Service Provider Act, finally live this April, giving exchanges a legit playbook. Clarity plus zero tax, well, that's kind of like finding a cheat code in a boss fight. Yet, an island life isn't for everyone. Some of us kind of need skyscrapers, Lambos that kind of double as our desert sand sleds, and malls that make Disneyland look underfunded. Enter the United Arab Emirates. The moment that you hit Dubai's airport, the Wi-Fi basically asks if you would like a tutorial on mining an NFT. Okay, so a slight exaggeration, but the vibe is very much real. Across the 7 Emirates, you pay zero tax on crypto trading, staking, mining, or even selling. And I sat in a co-working space overlooking the Burj Khalifa where programmers, in Coronas kind of pinched layer 1 upgrades over, coffee. Now, regulators, that's VARA in Dubai, FSRA in Abu Dhabi, they issue licenses like golden tickets, which kind of means that you can build without sweaty palms. It's the full spectrum crypto playground. But my adventure needed some contrast, so I flew to a country where volcanoes moonlight as power plants. El Salvador. Remember when they made Bitcoin legal tender back in 2021? Well, folks called it crazy. And well, crazy is building a Bitcoin city shaped like a giant bee, powered by geothermic heat, and promising no income, property or capital gains taxes. Standing near the kind of San Vincent, I can't even pronounce it, a volcano. And I kind of watched engineers, measuring steam vents like they were auditioning, I guess, for Mythbusters. And the digital asset laws means whether you're holding, trading, or buying, Uncle Sam, stretch that, Senor Son, takes nada. Now, maybe tropical humidity just isn't your jam, and you prefer kind of bratwurst and kind of piñatas. Well, Germany, surprise, surprise, can be your ally too if you wield patience. Hold your Bitcoin, your Ethereum, or even your meme tokens longer than 12 months, and any sale is tax-free as Oktoberfest, smiles. Now, I kind of shared a table in Munich with a retiree who kind of bought Bitcoin back in 2019. He toasted me with wheat beer, which I'm gluten-free, wasn't good. And the trick is to kind of treat your coins like wine. You just let them age, he says. Now, even if you're an impatient trader, Germany throws you a bit of a bone too. Annual gains under $1,000 are, well, tax ghosts. Portugal rounds out the lineup today with a bit of sunset that kind of makes your phone beg for portrait mode. Long-term crypto holders, say over 365 days, pay nothing on gains. Before March 31st this year, expats could still grab non-habitable kind of resident status, turning most foreign income into tax phantoms and capped domestic income at 20%. Sure, short-term flips under a year now pay 28%, and staking rewards get taxed. But if you're a patient hodler or digital referee or retiree, Portugal is kind of like a chill uncle who kind of lets you raid the fridge, surf in the morning and code in the afternoon. HODL forever. By now, you're probably thinking, this is a great, stamped my passport yesterday, but let's slow your roll. Residency hoops are real. Now, Caymans, they need minimum stays and substantial funds. The UAE expects you to either work, study, or invest. El Salvador wants proof that you're not just volcano sightseeing, and Germany's clock starts only once you actually become a resident taxpayer. And Portugal's NHR door is now closed for newcomers. So I kind of nearly learned the hard way what actually hopping between these places like a digital nomad kangaroo can trigger, center of virtual interest or vital interest, audits faster than you can say multi-sig. And halfway through my odyssey, of course, I paused a kind of layover lounge and realized something much bigger than lower taxes was cooking. And each of these regions isn't just easing the kind of fiscal pinch. They're actually courting the entire crypto industry, from miners to NFT artists. And regulation isn't a dirty word when it comes to clarity. It's kind of like your favorite video game. Tell me the rules up front so that I can strategize instead of flipping the table mid-match. Now, this one might just shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional, right? After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and the video today is for entertainment and educational purposes only. Alright, so let's get the seatbelts back on and let's kind of tackle the elephant, or rather the Kraken in the room. While bouncing between time zones, I still needed a rock-solid trading platform. Right, Kraken Pro kept showing up in conversations like the cool kid at every party. Low fees, deep liquidity, and a UI that doesn't try to reinvent the wheel. Now, if you want to check it out, the link that's in the description is an affiliate link that directly supports this channel and fuels my caffeine habit. So thank you in advance. Now, let me kind of color in some dollar signs for perspective here. Suppose you're a mid-level kind of dev who turned 4 BTC into 5.5 last cycle. About a $1.5 million paper gain at today's kind of $117,000 kind of price tag. Now, in that kind of US, you would have waved goodbye to roughly 20% long-term capital gains plus state tax. Call it $330,000. Now move that same wallet to Grand Cayman and you've actually effectively given yourself a luxury yacht-sized raise. Now in Dubai, that difference also buys you a 3-bed apartment overlooking a golf course, not to mention Friday brunches that make Vegas look, under-catered. In El Salvador, your unspent gains might actually build schools. No joke, right? The government has reinvested Bitcoin revenue into infrastructure and education. I chatted with a surfer instructor who accepted sats for a lesson, then paid his phone bill in the very same afternoon, all without burning a single dollar of conversion fees. He grinned. It's kind of like the ocean, no borders, right? And remember, right, numbers back him up, right? National Bitcoin wallet downloads jumped 42% year over year, and merchants accept now tops the 60% in tourist hubs. Germany's 12-month clock sparks a very different strategy. I call it the Beer-Cellar or cellar plan, if you will, right? Now, if you kind of metaphorically stash your coins like bottles of kind of 𝗗𝗶𝘀𝗰𝗱, ignore market noise and pop them open after a year, well, data from German Federal Central Tax Office shows a 29% increase in voluntary crypto disclosure since 2023, largely because one-year rule incentivizes transparency instead of evasion. It's proof positive, the sensible policy can actually bring traders into the light. Portugal's surf and save lifestyle has measurable ripple effects too. Remote work surveys reveal that digital nomads spending 6 months in Lisbon, each inject an average of 30,000 euros into the local economy. That's restaurants, co-working spaces, surf schools. Now, the government may tax short-term flips right now, but they still cherish the long-termers who kind of bring stable money and international talent. Even the UAE's crypto cluster in Dubai's Jumeirah Lake Towers boasts 1,600 registered blockchain companies, according to Vara's spring report. It's also where I am recording this video from. Now, that destiny, or density, I should say, it means that if you kind of code hits a snag at 2 a.m., there's probably a Solidity dev at a cafe downstairs tweaking a contract over Karak Chai. Right? Community at scale. Now that is priceless. Okay, let's get back to the boots on the ground then, right? In the Caymans, I kind of touted, or at least I should say I toured, an office. The devs were kind of building a DeFi yield aggregator. They joked that their greatest risk wasn't hacks, but sunstroke. In the UAE, I attended Token 2049 and watched Eric Trump share a stage with Justin Sun. Try writing that on at least as kind of fan fiction. Now, El Salvador's kind of Bitcoin beach is still very humble, but every kind of, pursuer, store has a lightning QR code taped next to the hot sauce. Germany, I visited, and digital, it is very much the stock exchange spin-off, if you will, where suits, discuss staking life as if it's as normal as dividend reinvestment. Now, Portugal's kind of Algarve, is quietly morphing into, a silicon surf. Ultimately, the common thread is agency, right? These places, they empower you to architect a life where your gains feed innovation instead of just disappearing into an opaque tax maze, lining some PR or MP's kind of greasy pockets. Now, a cautionary tale here, and it's an important one. Laws can flip faster than a meme coin pump, right? El Salvador's talk with the IMF, for example, could add wrinkles. Germany could tighten under EU pressure. Portugal already kind of tweaked its rules this year. And that is why our free educational Discord server, link also in the description, is pure gold. It's where thousands of us swap updates in real time before the headline even hits. Now, there was a climax moment in all of this journey, and it hit me not on a kind of boardroom or in a boardroom, but actually on a kind of paddleboard in Lagos, Portugal, right? I checked my phone, BTC was up 7%. Old me would have immediately calculated the tax here. New me, however, I simply kind of smirked, right? The stress evaporated like sea spray. And that's when I realized the true value of a tax-friendly jurisdiction. It isn't the saved dollars. It's the mental bandwidth that you reclaim to build, learn, and yes, occasionally even unplug. So, what is the catch? Documentation. Right? Paperwork is the boss fight that no one beats on the first try. The Caymans asked for notarized proof of address. The UAE needed attested degrees, and you had immigration that wanted fingerprints and local bank references. Germany requested, bilingual contracts. And Portugal, well, let's just say you'll become best friends with your accountant. But compared with losing 30+% of your upside every year, well, calling a notary seems a bit like a spa day. Okay, so let's go ahead and distill the key takeaways here that you can tuck into your carry-on. 1, you got to choose your jurisdiction based on lifestyle just as much as the law. A zero tax rate, it won't help you hate humidity or winter. 2. Understand the residency clock, right? The magic 183-day rule, local center of interest tests, visa renewals. 3. Regulation clarity beats blind freedom, right? A licensed exchange beats meeting a stranger in a cafe with a ledger. And 4, diversify not just assets, but geographies, right? A plan B, passport, or residency is the best hedge against sudden policy whiplash. And remember, right? Kraken Pro link or down below, right? I mentioned earlier, right? I crunched the numbers by consolidating trades there instead of spreading across 5 smaller exchanges. I saved nearly 18 basis points in average fees last quarter. Now that's kind of when you're scalping, vanilla altcoins. Those kind of basis points actually are the difference between high fives and throwing your mouse across the room. Multiply those savings with the tax advantages that we've explored, and suddenly geographical kind of arbitrage isn't just a buzzword anymore. It's actually a bit of a life upgrade, but only if you track every transaction, right? Now, my ledger app of choice kind of spits out a neat CSV that my accountant loves. Pro tips, of course, that label wallet transfers with memos like Germany hold start or Portugal 365 countdown. So future you isn't trying to decode blockchain hieroglyphics, at midnight. Now, while the rest of the world sharpens its kind of fiscal pitchforks, these 5 jurisdictions are rolling out welcome mats embroiled with QR codes. Time will tell if they stay this friendly, but today they're effectively the cheat codes in the grand strategy game of crypto wealth. And if this road trip kind of through tax utopias gave you any new ideas, then smash that subscribe button so that you don't miss the next detour. And why don't you check out the video that's on the screen right now, and I'll see you all in the next video.